Hi, greetings from SDMIC classes. Nothing is impossible for a brave and hardworking person with a willing mind. We continue with Chapter 1, Introduction to Partnership and Partnership Final Accounts, Part 7. This is Chapter 1, 7th class. Hope you must have watched the previous videos. I believe you all must have understood. I request you all to pay attention. We have discussed some important adjustments in our previous class. 5 points we discussed: which account to debit, which account to credit, and what effect it should be given, whether it is a balance sheet item or whether it is a trading item or a profit and loss account item, whether to credit to the trading account or profit and loss account, or whether debit to the profit and loss account or credit trading account, or whether should be taken to the asset side of the balance sheet or a liability side of the balance sheet. Those we discussed, and 5 points also we discussed. There are around 22 points we have to discuss in this important adjustments. They are general adjustments. So now let us see what what we have discussed. We will see the 5 points we discussed were closing stock, outstanding expenses, prepaid expenses, income received in advance, income receivable. These 5 points we discussed, and what effects we have given, that is also I have shown as examples. Now let us see. I'll show you what are the things what we have learned in the last class and adjustments. The closing stock, that it is taken to the credit side of the trading account, and the second effect given in the balance sheet. Closing stock, asset side, balance sheet, asset side. It is given the asset side of the balance sheet. Now second effect we have given was outstanding expenses. Outstanding expenses means with the total expenditure whatever incurred till, for the 12 months or whatever the till that making the balance sheet till extracting the trial balance, whatever is the amount shown in the trial balance, it is taken, and then any amount payable, any expenditure already incurred but payable was not taken, that should be added. So the outstanding means, I have given as an example of the salary. Outstanding means for the month of March the salary may be paid on 1st April or 5th April or 7th April. That is a natural the practice of the companies, private companies and all. So they that particular month's salary will be added as an outstanding salary. So this total salary will be added and taken here to the debited to the profit and loss account, and then this outstanding salary is taken to the liability side of the balance sheet. Outstanding salary, the liability side of the balance sheet. So that is also we have shown. The third point we discussed were pre-received income. Pre-received income. See, third points we have discussed pre-received income. So we have shown as a maintenance as an expenditure. For example, there are several types of maintenance coming. That may be given for 1 year, and may be given on any particular month. That maintenance income received is 50,000. Total amount we received for 1 year. For example, computer maintenance or anything. So that means that is received in advance, and then whatever is paid, pre-received for the next year is carried forward. So that is deducted from this total income, total amount received, and then the balance sheet is credited to the profit and loss account. So the second effect is taken here in pre-received income. The pre-received income is first it is credited to the profit and this is deducted from the it is not credited, it is deducted. It is taken in the credit side, but it is not credited, it is deducted from the maintenance total amount received, and that this deducted amount is carried forward to the next year as an in the liability side of the balance sheet. Pre-received income, that is maintenance received in advance, 25,000. So now then the third point we discussed, and the fourth point means prepaid expenditure. I have given an insurance amount, means property insurance or any stock insurance or any insurance, general insurance paid for the year, for 1 year, maybe means paid any particular date, and from that date onwards, whatever that, from that onwards to 31st March will be taken into the particular current year, and the whatever paid for the next year will be carried forward to the next year. So here I have taken a 6 months for your convenience to better understanding. So the insurance paid, total amount paid for 1 year is 1,50,000, and the amount paid in for the next year is called as a prepaid expenditure, that is taken to the next year. So that amount debited is just for that particular year only, and the balance amount taken to the next year, that is taken into the asset side of the balance sheet. Just see, asset side of the balance sheet in the current assets, prepaid insurance. Now the fifth point we discussed was income receivable. Income receivable is we have shown as an example, fixed deposit done by the business for earning some interest, because the company must have some surplus fund. So they, instead of in the current account, they won't get any interest. So what they will do, they will put it in the FD account. So that FD account, they can earn some interest. So that amount received, suppose till that means that the total amount interest received is 50,000, and then FD interest means accrued, but it is not paid. If it is deposited for 3 years, 5 years, 10 years, whatever it is, so that particular year that the interest will be accrued, but it is not paid. It will be paid when at the time of maturity. So when for that particular year, that interest accrued will be taken, added with the total interest received till the date, and then this accrued interest will be added, and that will be credited to the profit and loss account. Then what we will do, this is not received, so we have to show to the balance sheet. So this will be added with the FD. See, for example, FDR, total FDR is 1 crore, and income receivable is 65,000 for 1 year, means that particular year. It's not yet received, it will be received at the time of maturity. So this is accrued interest on FDR will be added, and this will be carried forward. So it will be taken on the asset side of the balance sheet. It will be added with the principal amount. Okay, now I think you have understood all these points. Now we will discuss adjustments. Now bad debts. So sixth point is bad debts. For example, where is it? Okay. Now sixth point is bad debts. Bad debts, additional or new bad debts. Show to the debit side of the profit and loss account, and deduct from the sundry debtors in balance sheet asset side. So I will show you it as an example. Come on, bad debts. Total sundry debtors receivables, say 1,10,000. Say for example, the old bad debts was 50,000 at the time of extracting the trial balance, and then T Enterprises owes 2,000, becomes insolvent, 2,000, and X and company owes 3,000, becomes insolvent, means that amount cannot be recovered. So the now new bad debts will be 2,000 plus 3,000, 5,000. So total bad debts is 10,000. So what is the effect given in the trading and profit and loss account? Let's see. Now let us see. We will remove all this thing. Balance sheet, we will make it blank for your understanding. I will just show you where to take it. That is the thing. Now let's see what is bad debts. So sixth point is bad debts taken to the sixth point is bad debts taken to debited to the total to bad debts. Old bad debts 5,000 and new bad debts 5,000, total debited to the profit and loss account. Let us take it here. will be taken like this. To bad debts account, 6 point bad debts, old bad debts 5,000, and add new bad debts 5,000, total 10,000. So now the effects will be taken like in the balance sheet like this. Balance sheet. Bad debt, sixth point. See, total sundry debtors is 1,10,000. So less bad debts, that is equal to less bad debts, means old plus new. Bad debts 10,000, that is deducted, so the balance will be 10,000, 1 lakh. Now the seventh point is provision for doubtful debts or reserve for doubtful debts. So show to the same exactly the show to the debit side of the profit and loss account and deduct from the sundry debtors. The effect will be same. So the entry will be like this. Adjustments, seventh, reserve for doubtful debts. So 1,10,000 total debtors. Say for example, that means that say the RAD is 10,000 and TOs like this, and total is XII company new RDD provision for doubtful debts 5,000. So total is new RDD is 10,000 plus 5,000, 15,000. So now how the effect will be given, you just see. It's the same like means the previous one. It will be taken to the seventh point, to reserve for doubtful debts, old RDD 10,000, new RDD 5,000. So it will be 15,000 credited to the profit and loss account. Now the effect, second effect will be given in the balance sheet like this. What is the seventh point? See, less RDD means what was that? Means that sundry debtors, total sundry debtors, less bad debts, so 1 lakh. And if there is no RDD or anything, it will be taken to the 1 lakh will be taken here. And then then there is a means a reserve for doubtful debts is there, so that will be again deducted from this 1 lakh, and then 1 lakh less 15,000, that will be 85,000. So if there is no any other thing, it will be taken to the outer column. So now this is 85,000. Now the eighth point is reserve for discount on debtors. Show to the debit side of the profit and loss account same way, and deduct from the sundry debtors. Same effect will be given. Adjustment entry, reserve for doubtful debts. Like, see, suppose for example 1,10,000 total debtors, A and company 5,000, B enterprises 15,000. So discount allowed on 20,000. So this discount will be given on 20,000, 2%. So in order to get the payment early, so 2% discount allowed is 4,000, so 400. So what the effect will be given, that it will be debited to the profit and loss account and credited, and it will be deducted from the sundry debtors account like this. To reserve for discount on debtors 400, and it will be deducted from the sundry debtors account. Reserve for discount to debtors 400. So that next net effect will be 84,600. 84,600. So see, suppose if there is no bad debts or anything, it will be taken here 1,11,000, like that. It will be taken like this. Okay. Suppose, and if there is a bad debts, it will be deducted, and any other thing, then it will be taken as 1 lakh here. There is no other thing. So if there is any means reserve for doubtful debts, and if it will be taken like this 85,000. And again, if there is a reserve for doubtful debts, means a discount is given, discount for discount to debtors, so that will be deducted. So the final balance will be taken to the outer column of the balance sheet on the asset side. So now you understood this, no? Now third, one more point we will discuss, because we cannot extend it, because it will not get into the it will not be much easy to understand. So we will go slow and just watch again and again, so that you will come to know that where the effect is given and what will be the effect and what are the terms and what is the how to explain it and how to do that entries, that you can practice. And when we do some sums and all this thing, it will be easy to understand. So that primary thing is that now you should know where the effect will be taken and what should be done and how the entries are made. So adjustment entries are made. So now the ninth point is depreciation. Depreciation is a bit means more I will be explained, means shown the debit side of the profit and loss account. These are the more things, important thing means which side it and which account it will be taken, whether it is a profit and loss account, whether it's a trading account, whether it should be debited to the trading account or debited to the profit and loss account, or credited to the trading account or credited to the profit and loss account, or whether it's if it is a balance sheet and the second effect given in the balance sheet item, whether it to be asset side or whether it is a credit liability side. Or if it is in the asset side, if it they may not be sometimes it may not be taken to the liability side. Instead of taken to the liability side, it will be deducted from the asset side some of the amount, like means debtors. It will be deducted from that. Same way, depreciation will not be means taken on the liability side of the balance sheet. It will be deducted from the asset side of the balance sheet. From the fixed assets it will be deducted, that appreciated amount will be deducted. So now I will show you the examples of depreciation. We will just work out few examples for the clarification, better understanding. So the book value of depreciation. Depreciation is the main heading. There are depreciation will be happening to many of almost all the assets except on land. Depreciation will be happening. So building depreciation may be there. Machinery, because it is continuously using, then the machinery there will be depreciation. Furniture, motor car, vehicles, electrical installation, AC, etc. Furniture, so many things. Now there are depreciation happening. Computers, IT products, all these depreciations are happening. So now we have taken here 4 types of assets for your understanding. Machinery, we have taken 20 lakhs. Depreciation at the rate of 20%. 4 lakhs. Machinery, we have taken the value 20 lakhs and depreciation taken at the rate of 20% per annum. So the on 20 lakhs it will be 4 lakhs. And the WD means return down value, means 20 lakhs minus 4 lakhs, that is equal to 16 lakhs carried forward. So now furniture total value is 6 lakhs and depreciation at the rate of 10%, 60,000, and written down value 5,40,000. So depreciation will be 60,000 for the particular year. Now electrical installation is taken 12 lakhs. Depreciation at the rate of 10%, 1,20,000, and written down value 1,08,000. Sorry, 10,08,000. So depreciation amount is 1,20,000. Now vehicles and motor cars, total value is 18 lakhs. Depreciation at the rate of 15%, it is taken 2,70,000. WDV, written down value is 15,30,000. So total so the depreciation for motor car and vehicles is 2,70,000. Total depreciation 4 lakhs plus 60,000 plus 1,20,000 plus 2,70,000 is 8,50,000. Now the effect will be given, means it is not like that means I have given as an example only. The different companies, that value may be different, and depreciation will be taken 2 methods. If it is on some companies take it on a straight line method, and other companies take it on a written down value method, WDV method. Mostly the income tax authorities take it on a WDV method. So that you will learn later. Means when you grow up and all these things. No, you then when we go further, we will learn that. So right now you have to just understand like this. Now the entries will be the effect will be given like this. See, the profit and loss account, it will be taken as a to depreciation, we have taken this machinery, what was that, 4 lakhs, furniture 60,000, electrical installation 12 lakhs, oh sorry, 1 lakh 20,000, vehicles and motor cars 2 lakh 77, total 8 lakh 50,000. Now how, this is the one effect we have debited to the profit and loss account. The second effect will be given, this adjustment, second effect will be given to the balance sheet. So let's see, now we are not taking to the liability side. Instead of doing that, we are deducting from the particular asset. The depreciation amount will be deducted from the particular asset. So like machinery 20 lakhs and less depreciation 4 lakhs, balance carry forward 16 lakhs. So this type of entries are making, adjustment entries are making. Now furniture 6 lakhs, depreciation 60,000, 5 lakh 40,000 carry forward. So this will be deducted from here. Instead of doing that, we can take it like this. Gross block means the total assets will be taken, and we can take it in the liability side as a depreciation amount. So normally that practice is not doing. Instead of doing that, what is the value of the depreciated value of the assets will be shown here. So it's a better understanding. Instead of taking to the liability side, it will be deducted from the asset side of the, from the machine particular asset. Like this notes, like means we have done that, means for debtors we have seen this, we have taken like this, not debtors, we have deducted this amount. Instead of taking to the liability side, it is taken to the, we have deducted from the debtors account. So I can show you, means suppose if we are not taking like that, for example, there is a balance sheet, we will take it. See, for example, fixed assets we have taken in the trading account, we have taken 8,50,000. Okay, so now what was the total assets value? Total asset value was 20 lakhs plus 26 plus 30, 50, 56. So total asset value is, well, for your better understanding, I am taking this machinery 20 lakhs, furniture 6 lakhs, electrical 12 lakh, motor 18 lakh. Okay, now let's see what are the amount coming. $56 lakhs. Now 8,50,000 is deducted, not depreciation. $8,50,000. Okay, what is the balance carry forward? For 47,50,000 is there's a net effect. So instead of taking it here, suppose if I am taking this less depreciation this side, just to see the balance sheet amount, what is it effect taken. So we have deducted this. Now what is the total coming? Just see, 47,50,000. I'll show you here in this. $47,50,000. So the net effect will be same. So instead of making that entry, it is the practice. This is the practice normally we do. Machinery less depreciation, whatever is the assets less depreciation, and that final amount will be carried forward. So this amount is the depreciated amount, the 8,50,000, that is debited to the profit and loss account. So because this is the expenditure incurred, means the depreciation expenditure incurred for that particular year, and that will be debited to the profit and loss account. And then the balance sheet, that amount means this total amount will be this 8,50,000 is deducted, and the balance will be carried forward like that. So means assets, it will be taken on the asset side less deducted from the particular asset. So it is clear. Hope it is clear. When you do it and practice it, you will come to know that. So the today what we discussed, bad debts. We discussed 3 more points today. We have 4 points we discussed. Bad debts, the entries are means that older bad debts plus new bad debts, total debited to the profit and loss account and credited to, it will be deducted from this particular sundry debtors account. So 10,000 deducted bad debts, less bad debts 10,000, and the balance will be carried forward, means taken to the outer column. If there is any other adjustments pertaining to the sundry debtors, it is again that amount will be adjusted, like means reserve for doubtful debts 10,000 plus new this is old, this is a new one, and total 15,000. Again that will be it is debited to the profit and loss account, and the net that will be deducted from the sundry debtors, particular sundry debtors account. So that will be deducted from the total sundry debtors account, and the balance sheet can be carried forward. And if there is any further adjustment, it will be again deducted from the sundry debtors. So like for example, reserve for discount on debtors 400, so that will be deducted from the sundry debtors, and the final will be carried forward. So there is a 8th point we discussed, 8th point, and the 9th point is depreciation we discussed. Depreciation, total depreciation to depreciation account, all the depreciation will be working will be shown separately, and the total that after the working, the total amount what is received is taken in the debit side of the profit and loss account, and this particular depreciation is deducted from particular assets account, like this. It is a fixed assets, machinery deducted depreciation, furniture deducted depreciation, electrical depreciation deducted depreciation, and vehicles deducted depreciation, and the balance amounts are carried forward. So I think it is clear. Now we will take it other adjustments, like 10th and other adjustments. There are 22 adjustments I have told you. There are 22 adjustments in the major adjustments in the final accounts, and after that some hidden adjustments are also there. Some 7 points are there. So now we discussed today 9 points, and just practice this 1, 2, 3, 4, 5, 6, 7, 8 and 9. So please read it well, very well, practice it, watch again and again. If you don't understand, watch again and again and practice it, so that it will be very easy, very easy. It is very simple. Okay, now we will continue in the next class, because I don't want to stretch it more, because it will confuse you more and it will be bouncing from your head. That should not happen. Whatever you are learning, that go even if you are going slow, study it well, so that it will be helpful even for your future. That is the most and very important thing. So now let us conclude today, and we'll continue in the next class. As usual, I request all my students to study regularly. If you don't understand, watch again and again, because I want my students to score full marks in the subject, or just close to 100% mark. Most important, you all must make a strong base in the subject that decides your career. Please read again and again, learn and practice to achieve your life's goal. See, these are not that much difficult to learn. Once you focus on the particular thing, focus on a particular thing and study it, and systematically, means how it is done and what is the effect given. You can, since it is a recorded class, you can make it slowly and pause it and see it again, and watch again and again, and you can drag it backwards and see again and again how the effect is given. So it will be very easy, and you can become an expert in the subject. My message is help each other to grow together for a better India. Means there are several students maybe requiring the help of such type of classes. So many students whether regular class students, or if they don't understand, they can use my classes and take the help of my classes. And there are several students doing correspondence education, postal and distant education. Those students, it will be very easy, and those students who may not be able to afford private tuition classes, that they can also take the benefit of my classes. So please share it as much as possible, so that it can help many and can develop many talented young generation. Thank you for your attention.